What?
You want to buy a 10 unit in downtown Carlisle?
I already saw it. No, I wouldn't buy anything from. See, this ain't gonna work because I'm on the screen. It's like an endless loop of me. I'm gonna move over there.
That's not going to change what's on the screen.
No, but it won't be showing the screen through the camera overlay. I know what I'm talking about.
Oh, I gotcha.
It's okay.
You don't want to buy a building that's been burnt and redone for $700,000?
No. Is that the Hanover Grill place?
No, it's the first block, Hanover. It's where, it's where the land surveyors used to be. What's their name?
Same corner as where the vault is, or the other side?
No, it's down further. It's down by Howard Hanna.
Okay.
Yeah. I remember when it caught fire.
Lori's first. Lori's first.
Look, your biggest fan is on.
It's, I'd say this meeting's invitation only. I don't recall you being on the list.
It's messed up. It's so messed up. I'm supposed to be your favorite.
Can I be on the list?
Which favorite list?
Oh, just the invitation list. I don't care about.
Yeah, here's the invitation.
You were not who you were talking.
Here's the invitation. You haven't heard yet. The week of April 24th. That's the invitation.
Is that the week we're gonna, is that what we're on?
Someday that week.
What do I have to help with?
Beef, guns.
Oh,
We're gonna ask, see if you and Brandon would be available. Brandon, Marco.
Oh,
We're gonna move we're moving the
So
base of
open mind.
office.
I did know that.
So,
Are you guys gonna be officially in
Hi, Carolyn.
then? I guess the week after, right? What day?
The week of the
week
20,
of the 24th.
last week of April. We're not sure which day yet.
Oh, good. You're not gonna try to fit it all in one day.
And there's like 12 things that need to be moved. They're just all big and heavy.
12.
Well,
She
Barbara
really
can get 10.
underestimated the amount.
No, what did you say?
I said, Barbara can get 10.
It's the conference room tables.
2 conference, okay, I'm not counting all the chairs.
Yeah.
So 2 conference room tables.
Yeah,
One,
I
2.
leave on the 28th.
Okay, we'll do it for you. I'm making a list while you do your
Not
budgeting.
necessary.
It is
It's gonna
necessary.
magically end at 12. No, that's it. So,
That's all there is.
nothing else.
Hi, Esther.
Good morning, afternoon.
Good. That changed. How you pronounce your last name, Esther?
Oh, okay. You want the Dutch version, like the original, real one?
You have several versions?
Well,
Get
the
'em-
American, the real way to pronounce it is Esther von Schaik. Schaik, but I won't do that to you. So the Americans say Shaik,
Check.
but Schaik with the ugly sound. That's how they would say it over there. Schaik,
Okay. Check.
Shaik.
It's almost German. Just
Yes, yeah. It's not very friendly sounding, isn't it?
careful. I'm all German.
Oh.
Yeah, I'm not very friendly either, I guess. Thanks, Kyle, for letting me know. Tanya, no fair. This meeting is in-house right here. It's not on your deck.
Okay,
Are you at home?
I'll be late. Yeah, I'm at home.
I bet you will.
On the way.
Tanya, how's your coconut growing?
Nope, nothing yet. Nothing yet, but it's gonna grow. It is.
You planted a coconut?
I did. Yep, it's under my water heater right now in a bag.
Was it a seed or the actual coconut?
The actual coconut.
Okay.
Yeah.
John's coming in. Look, 3.
There you go.
Yeah, I took bets on how many people would show up for budget training because it's so exciting. We got what, 5 online. We're gonna count Lori. I guess we will, even though she's not an agent.
Yeah, he's got to count himself.
I didn't count myself. I counted these 5, the bottom.
April doesn't-
Well, it's because her hair and makeup are on point today. We should do it.
How many chairs are in
8
each conference room?
plus Nathan's. We'll get started here in like 3 or 4 minutes. Was it brisk on the bike today? Was it warm enough?
No, it's perfect.
Is it perfect?
Yeah. It was on the way out. People aren't watching.
No, they're not.
at all.
That's why I sold
I
mine.
was like, well, I might know whatever. That one's gone next week. So
I used,
I
People-
don't know that you're coming to the office.
I'll have something louder. I'm sure.
Oh, that's how I know it's you. I can hear you.
people used to come across the yellow line, and I'm always riding the left-hand side, which is where you should be. And when I started flinching, I was like, time to let it go.
Yeah.
Too many people don't know what they're doing out there.
Yeah, my biggest one is people not paying attention at like red light. So for whatever reason, I'm guessing, oh, you know, because they're down here,
Mhm.
they glance up and see a car, but they don't see me between the cars. So it's like they're at a stoplight or something.
Right.
Not a fan.
Harry, when I go to share screen, I can't see who's trying to get into the room.
No, you can, but you have to open the participant at the bottom.
Oh, okay.
Yeah, so if you click on that, you'll get a separate box that opens up.
And it'll show up at the top. But then if I open chat, I'll put it on the bottom. Okay.
So
I can still do it. My shirt looks all
Do you
different.
have a presentation put together? Of course, never mind. Never mind.
you just asked that.
I did.
It's almost as good as my job description.
I doubt that.
It's an inside joke.
I'm sure.
How many we got here? 1, 2, 3,
Yeah,
4,
one
5,
is
6,
bad.
7, 8, 9, 10. We exceeded my expectations. I said 6 people would show up.
I said 3 people in person. I was right.
You don't count.
She's not doing the thing.
I'm here to learn.
Oh, look, somebody's trying to get in. Danny Muller.
You already you can count. There's
We'll get started in 1 minute. Hi, Susan. Hi, Danny. Hi, Sage. Carolyn, April, Esther, and Tanya.
Hello.
Hey, hey. Where's your real face, Susan?
her big one.
I'm
That's
here.
That's your fake face. Where's the real one?
Hey, Chris, there's 12 items to be moved in Gettysburg.
There is not.
Yes, there is.
We're gonna count them all.
I just did. Rebecca's trying
I'm on it. This is why she can't sit in my training. It's because she bosses me around all the time.
I can lead you.
We don't need a boss.
No, we don't.
I can say we listen to them. I need one so when I mess up everybody. So. Like, well, that's what Terry told me to do.
Oh, here comes number 3.
Where is he?
Ingrid's here. You here for training?
Yes.
Perfect. Come on in.
Hey, there you.
Hi, pretty lady.
All right. Well, we're gonna go ahead and get started. But let me show you who's here. We got John Cummings. Say hi, John.
Hey, hello.
The effervescent Kyle Shevlin. Everybody knows Kyle.
You know effervescent?
Effervescent. Yes.
I'm like,
My second favorite partner right there is Terry Powermaster. And there she is. Beautiful Ingrid. Smile, Ingrid. All right. See, they showed their faces. Susan, April, see your faces. All
I mean, if
right.
you want to stare at my ceiling, you're more than welcome to, but I'm on my phone.
Perfect.
So it sits there and I listen and write notes.
Okay, great. It'll be a test later. Actually, there is some trivia. I don't have a, you know what? I don't have a prize. I'll get some prize. I have 3 trivia questions. Pay attention. Perfect. Kyle says, we're giving away Ritz crackers. They're here in New York. Come get them. All right. So today we're going to talk about something that's not very popular, as you can tell by the turnout, which is how to budget money, how to budget and save and plan for tomorrow, how to run your business. So something that's near and dear to my heart, I've been doing this for a long time, is without a good budget, your business will fail, plain and simple. And everybody does it. Everybody budgets to a certain extent, I think. But the question is, do you do it well? And the whole idea about work is to make sure that you have some left over, just like a squirrel saves up nuts for the winter. Hopefully you guys will pick up some ideas on how to save for the future, whether it's for something you're working towards or for retirement, which everybody's headed there. I've said it before, I'll say it again, time is your friend, time is your enemy. You've heard that being said before, and that is absolutely true. John Wilson's clicking into the room here. We'll get started with once he says, where's he at? Hey, John, how you doing? No, John's not visible either. He must have a bad hair day, just like me. So let's share my screen. Let's do this one. I wonder, how do I start this? Isn't there a play button?
It's slideshow.
Slideshow.
I gotta teach him how to do it.
From the beginning. Look at that. And I can, so this is where Terry, where I can't see the participants anymore.
Did you click the box?
It's showing people there, but just will it show who's trying to get in if somebody tries to get in?
Yeah, you should get a little thing up at the top of your screen that pops up that says.
Okay.
Yeah.
All right. So budgeting for success. Is this your budget? Look at that picture. People burning their money. And as an example, my wife and I, we go out to eat a lot. And I said to her the other day, holy crap, we just spent another $110 to go out to eat one time. And we all do it. Terry does it every day. She tries to talk me. Kyle, are you trying to get into the
Yeah, I
meeting?
was just saying pop up.
Oh, okay. Okay.
Just curious.
How much money do you spend on eating out in a day or a week or a month? If you take a look at that and keep track of it, it's amazing. We went out to eat, I think 3 times last week because my son was home. We went and got groceries, and then we were at Lowe's, and it's like, it's so convenient. I think in those 3 days, we spent $350. So is this what your budget looks like? Is it just money just going up in flames? So that's some of the stuff we're going to talk about. It's uncomfortable, I know, but hopefully it won't be too uncomfortable. So some of the things we're going to talk about, if you sat through one of my classes here a couple months ago, some of these things are going to tie in, and we're going to talk about again. Things we're going to talk about: what's your greatest asset? What business are you in, and what should it look like? What bills do you pay first when you get paid? Who wants to be a millionaire? We're going to talk about how can you become a millionaire easily. What's a budget and how do you do it? And we're going to talk about taxes and all that fun stuff. That hopefully everybody's taxes are in line. Is there anybody here that hasn't done their taxes yet? Kyle, Ingrid?
They're done. They just, I'm that guy. I have to not send it
Until it's time. But you're prepared to do them,
yes.
right? Okay, good. Thank you. So what is your greatest asset? And you can take, everybody can take yourselves off and mute. I can't see everyone with the type of screen that we're running. So shout out as to, if you know the answer, please don't say it. But what is your greatest asset, everybody? Give me some ideas. Anybody in Zoom world? What's your greatest asset?
Myself.
Yourself? Was that Carolyn?
Yep.
Okay, Carolyn says herself. John, what's your greatest asset?
Myself.
Yourself? Anybody else? Kyle?
Time.
Time is, that's a good one. Time's your greatest asset. Anybody else out in Zoom world want to take a shot at it? All right. My opinion is your greatest asset is your ability to earn an income. Because if you can't make money, you don't have housing, you don't have food, you don't have security. So your asset is your ability to earn that income. Think about how much time you spend working, putting into your craft, whether you're part-time or full-time with real estate. I know Ingrid has a full-time job, right? Still a full-time job. So you put 40 hours a week in there, plus the time you put into real estate. If you took away your ability to earn an income, where would your family be at financially? Would you still be living in the same house? Would you be able to eat out the way you do or do the things you want to do? No, you couldn't go on vacation. So your ability to earn an income, this is my opinion, is your greatest asset. These things right here can take away your ability to earn an income. If you're sick, sniffles, you get hurt in an accident, or death, obviously, your ability to earn income. Where would your family be if you weren't able to earn an income? Whether you're the main breadwinner or not, my wife always says her income is insignificant, but yet she gets health insurance where she works. So her ability to earn an income and work where she works provides for our family. Even if she only made $10,000 in a year, it provides for our family. So her ability to earn that helps us. If she gets sick or hurt, heaven forbid something happens to one of us, that's going to alter our lifestyle dramatically. And the same is true for everybody. So have you done anything to prepare or protect yourself from those inevitabilities? People are going to get sick. People are going to get hurt. And unfortunately, people are going to pass away. Have you prepared for that inevitability?
Hey, Chris.
Next question. Yes.
If you're going through the slideshow on Zoom land, it's still on the first slide.
It is.
Yeah.
Is anybody else seeing anything but the first slide?
Yes, I see the first slide only too.
First
the
slide.
Hold on a second. Let's stop sharing.
I was writing like a crazy person to keep up with you.
Oh, I'm sorry. Well, we only got to slide 6, so catch up. Let me click it again here. Let's try this. Can you see that slide?
It's still the burning money. The burning money.
Yeah, I just put it on burning. How about now?
Burning money still.
Yes.
Oh, there.
different
Now.
slide.
There
Yeah.
you can
So
see it, but we
what are we
can't
going
see
to talk about?
it. All right, so hold on a second. I got to do something else here on my end because now the people in this world. Show taskbar and slideshow. All right, what can you see now?
It's a house and a hand.
Okay. All right, so this was our first slide. Let's see if I can minimize this. Well, what was happening was when I changed the slides here, they weren't changing for people in Zoom. All right. Oh, Tanya said she had to leave. All right. So we talked about our greatest asset. We talked about our ability to earn income. And we also talked about illnesses and injuries. Can you see that online, everybody?
Yes.
Okay. So
Yes.
what business are you in? Are you in the real estate business? Selling houses, listing houses, rentals? What business are you in, Esther?
I'm in the business of real estate.
Okay. Anybody else? What business are you in? Terry?
I'm in the people business.
Terry's in the people business. Explain that. What do you mean?
I mean, I'm in it to build relationships and to help people and yeah, I'm in the people business.
You're in the people business. Anybody else?
I like her answer.
You like her answer? Because she sat through this once before. So Terry's exactly right. You're in the people business. You are in the relationship business. And it doesn't matter whether you're in real estate, if you work at McDonald's, or you're a truck driver, you're in the people business because you have to relate with your boss. You got to relate with coworkers. You got to relate with people that walk through your door in your business. But selling any product is a result of how well you develop a relationship with people. So think about that. Regardless what you do, you're in the people business, and what you sell or the money you earn is a byproduct by how well you develop relationships. If you're really good at developing relationships, you'll sell anything because people buy from people they know, like, and trust. Make sense?
Yeah.
Okay, great. Let's go into trivia. Everybody put in my phone number. There's my number, 717-991-8405. Most of you, I think almost everybody has my number stored in your phone by the number of phone calls and texts I get from you.
I still don't have it saved. I'm
You
sorry.
still don't have my phone, Kyle?
I
thought we
know
were
what it is. I just searched for a keyword because I know what we talked about.
You are my number one. That's it.
Yeah,
We're done. All right.
Update your message.
These questions have nothing to do with what we're talking about today. All right. So the first person that answers this correctly, I'll get you something. Does a buyer have the right to terminate the agreement of sale under the mortgage contingency? Yes or no? That's all I want is a yes or no. First person to give me the answer wins. Hold on. They're all coming in quickly. Let me see. So the first one that answered was April Klein. She says no, they do not. Kyle said yes. Carolyn said no. Esther said yes. Sage, Ingrid, and John Cummings all said yes. The correct answer, there's two people who got it right. April Klein and Carolyn Vaughn are the only two that are correct. The buyer does not have the right to terminate the agreement of sale under the mortgage contingency. Everybody said yes. I expect you to go to Justin's training tomorrow on the agreement of sale. Only the seller has the right to terminate. And I'm not going to go down this rabbit hole, but we'll talk about this some other time. But the buyer does not have the right to terminate the agreement of sale. Isn't that true, Terry? Okay, we'll talk more about that later. But that's a misconception that most agents think. If you're a listing agent and you get a termination from a buyer's agent that they're going to terminate under the mortgage contingency, the buyer does not have the right to terminate. I know everybody's like, what? Yep. So we'll talk more about that another time. Great subject. I'll tell Justin. Back to our training. What bill do you pay first? Let's go down the line here. What bill do you pay first? Esther, you're on my screen here. Sorry, you're going to go first.
My rent. It's my first bill to pay.
Pay your rent first. John?
Utilities.
What'd you say?
Utilities.
You pay your utilities first. So you get Lori gives you a check, the admin gives you a check, and that's the first thing you're going to pay. Okay. Kyle?
I have no idea.
Okay.
It's all like I don't have anything that I specifically pay. It's all just
All right. Ingrid,
Not technically a bill, but I pay my tithes first.
pay your tithes. So you pay the church. Okay, great. Good answer. April?
Usually my taxes.
Okay. Good answer. Rebecca, I saw you up there.
Yourself.
Pay yourself first. That's a great answer. Who else we got on there? Carolyn?
Should be myself first, but it's my rent first, and then it's me.
So when you're saying these, is that what you actually pay, or is that what you think I want you to say?
Well, I would like to pay myself, and then I figure, oh my God, I have something else to pay. So I first put it in my account where I don't touch it, and then maybe I have to touch it later. So this
Okay.
was not good.
How about Susan? What's first thing you pay?
I take my money out for my taxes first.
You do, okay. Who we got? Sage?
I kind of do the same thing. I don't have a ton of bills to pay, but taxes are definitely something I take out first and put in a separate account, because if not, I will use all that money. And then when tax time comes around, I'll be scrambling.
Okay. John?
I think you want me to say myself, but I would have to agree with everybody else with taxes.
Okay. And we have a new person this week, not new to real estate. Hey, Danny, how you doing? Can she hear us? Hello? Okay, maybe she's listening and not talking today. So a couple things I put on the screen here that people commonly say is mortgage, their car payment, their groceries, entertainment. Those are all things that people pay first. I like to think that you should pay yourself first. A lot of people said taxes. Why wouldn't you pay yourself first? You are more important than your taxes. Your family's more important. But how do you pay yourself? If you, back during my training, I had recommended a book which was called The Richest Man in Babylon, and recommended that people get that and read it. If you write that down again, The Richest Man in Babylon, because it recommends that you pay yourself first. Take whatever percentage each month before you pay anything else. You pay yourself. And if you pay yourself first, meaning that you put it back for a rainy day or towards your goals, or whatever, and we'll talk more about that, put that money aside first, 10%, 15, 20, whatever it is. If you pay yourself first, I get more excited when I put money in my pocket, put it in my savings account, because that gives you security, gives you some faith that the things that you're doing and the work you're putting in is paying off, because we put in some long hours. So pay yourself first, and we're going to talk about how you do that, and how you can grow that. But and we'll break down those percentages here in a second. So rhetorical question, but everybody can shout the answer. Who wants to be a millionaire? So
I want to.
you want to. Everybody wants to be a millionaire. Sounds hard, doesn't it? To be a millionaire. There's an easy way to do that. But I'm going to come back to my statement earlier, is time is your friend and time is your enemy. And of the more seasoned people that are here, myself, I'm going to include John there because he's got a couple gray hairs too. I don't know who else is seasoned on our out in Zoom world, but time is your enemy. If you're up in the 40s, 50s, 60s, time has passed you by, and the formula I'm going to give you will reflect that. So if you assume a 7% return, if you're my son's age, who's 25, and we have some younger people here. Oh, Kyle has gray hair too. Hey, Kyle.
Yeah, I like that you look at me for younger.
Okay. I was trying to disregard you because I'm not your number one anymore. But anyhow, if you're assuming let's say you're 25 years old, talk to your kids, your grandkids. If you save $100 a week for 40 years, and that's all you put away is $100 a week or $5,200 a year, assuming a 7% return, and you never touch it, it'll be $1.1 million in 40 years. And that sounds like a long time, but $5,200, if you say $100 a week, most people are like, I can't afford $100 a week. Can you afford $5,000 a year? How about one settlement? Average sale is what, $200,000. If at 3%, that's $6,000. Even if you're on an 80% commission plan, that's $4,000 some dollars, right? If you save $100 a week for 30 years, look how it drops by half. It's $507,000 just because you waited 10 years to start doing that. I wish my dad or someone had talked to me about money when I was younger. I didn't really start saving money till I hit 50 when I sold my first business. I'm sorry, when I sold my second, I'm 58 as of last month. So I really didn't start saving money until then. If you save $100 a week for 20 years, it's only worth $220,000. And why is that? What's the eighth wonder of the world, according to Albert Einstein? Say it out loud. Compounding interest. Compounding interest because time is your enemy and time is your friend. If you put back money every week, don't wait till the end to save it. You got to do it now. $50 a week, something. Put back some money that you never touch. That's why I say pay yourself first. Put it back, and time will pay you back. That makes sense? Does anybody out out there doing that now that religiously saves money, puts back money that you never touch?
Okay.
You do? Okay, great. Trivia time. Everybody paying attention? All right, so I already owe April. April, you're out of the running for the next one, but you can answer anyway. Because if you ever play trivia with April, she's like a professional. I think, didn't you guys go to GAR,
Yeah, we
April?
killed it.
Yes, and we won. And
Yeah,
I'm
you
going
guys
trivia
won.
tonight too. So
All right, you can answer, but I'm not gonna let you win again.
that's.
So the question
okay.
is, must the buyer present all inspection reports to the seller? Yes or no?
No.
There you go. She was first.
I don't know who's first because my phone's blowing up right now. Okay. So Danny says, whoops. Danny says her phone's not working right. Something's not working right. First person to answer was Karen Vaughn. She said no. Sage said no. Esther says yes. John says yes. Ingrid says no. John Wilson says no. April says no. And Danny says no. The answer is yes. The buyer must present all inspection reports to the seller according to the inspection contingency. So our winner is Esther. Congratulations, Esther. She's paying attention to Erica, I guess. Isn't that right?
Thank you. Yes, I'm positive. I'll pass it on to her. She'll be happy to hear it.
Okay. I don't know what I'm going to get you guys, purple jelly beans or something, but it'll probably be a gift card for, I'll talk to each of you and see what you like. So does everybody understand that? That the buyer must present all inspection reports to the seller? Why is that?
Because it's about the property.
Got to prove it. Yeah. All right. Any objections? Great. We'll move on. So where does your money go? Let's see if I can move this. Where does your money go? So if you look at the last line here, assuming you have 14 sales in a year, that's a little over one sale per year, and the average price of $200,000. If you're on an 80% commission plan, you're going to make about $60,500. That's just in this example. So if we use that as our example, you pay yourself first. This is how I budget my money. This is what I use personally. So you can move your percentages around wherever you want to, but this is how I do it. And nobody, my way isn't always the right way. The thing is that you need to come up with a budget so you don't overspend in some areas. So I pay myself 10% first. So if this was my paycheck, I would put this much money aside. Actually, my wife would take it from me and she'd put it away because she's much better at it than I am. But pay yourself first. Advertising for your business. So you're in the real estate business, you're in the people business, right? So if you owned a business that was on a street corner, look at your real estate business as a brick and mortar business. It's not, but you got to run it just like it is. So if you were to go out and open up a business on a street corner and put it there, you have to budget your money. You're going to have to save money. That's how you pay yourself. But you're going to need to put money back for advertising. So as a real estate agent, you need to save money for advertising. What falls under advertising? What kind of things would you think fall under advertising that you do?
Marketing.
Like what? Give me an example.
Sending out like newsletters every month.
Newsletters cost money, right? So either you're going to print them yourself or you're going to have a printer do it, right? So that could be, you could put postage in there, possibly because that's marketing. Ingrid, you did something over Christmas with didn't you go door to door doing something?
Yeah.
You did some pop buys. Your pop buys is advertising dollars. So you take all of that. If you get a check, let's say you got a check for a settlement for $4,000, take 10% of it, take $400 and put back for advertising for your business, because you must continue to advertise effectively advertise your business to continue to get more business. If you don't advertise your business, people aren't going to know that you sell real estate. And the next thing you know, you're crying to Terry that you're not making any money. And what am I doing wrong? Well, you got to run your business like a business. Your car is going to take up about 15% of your money through gas, oil changes, inspections, car payments. I put back about $15,000. If you're like Terry and she wants to buy a Maserati, she told me recently,
Oh my God, I didn't.
this is why you shouldn't sit in my class. You got a budget for that. So don't listen to her. If you're going to drive a BMW, do you have the budget to do that? Yeah, it's going to look good. It's going to look good, but do you have the money to be able to make that payment each month? Some people live way outside their means. I drive a Hyundai. I'm not too proud or ashamed to say that. I get 55 miles per gallon because I don't want to put 15% into my car. I want to put more money into paying myself. So move these percentages around to where it makes sense for you and your family. Ingrid said church, tithing to church, 10%. Put money aside for if you don't go to church, you do donations to whatever charity it is out there. And that's real important. And that also ties into your business is making donations to your local charities to stay visible. Your business can make charitable donations, which are business expenses as well. So set that aside to make those donations to the church or your favorite charity. Next thing, education and training. That could be continuing education. It could be going to some classes at GAR or RAAC. It could be coaching, probably low cost coaching. If you're only putting back 2%, maybe you want to put back some more money towards that education. If you're looking to get into broker classes, things like that, you may need to take some money from somewhere else to help budget for whatever it is that you aspire to do. Entertainment, we all blow this one out of the water. This has nothing to do with your personal expenses, okay? This is your business expenses. How much money do you spend on entertainment, taking clients out to lunch or coffees? What else can you use for entertainment? Anybody else? You know what John Lindemolder does in Carlisle every time, I swear, every time he comes to the office, he brings in cookies, bagels. He has that as entertainment because he wants the agents to know that if you need somebody or you need a referral, make a referral, I'm your guy. He's very visible. He buys that for the office and everybody knows John. And I guarantee you that's his entertainment budget. Part of it with his business. He also takes people out to coffee and lunch or drink or things like that. Supplies could be computer. Maybe you need a computer. You got a budget for that. Oh, I'm sorry, you got technology down there. It could fall under there, but it could be pop buys. It could be any number of things. It could be pens, paper, anything you need for your business, for your supplies. Budget for that. Taxes. I heard somebody say that they pay those first. Yes. I don't know how many agents I've heard that have gotten in trouble. I've only been in real estate since 2017. Terry's been around for a couple years more. How many agents have you heard getting in trouble around tax time because they forgot to put money back? A lot of them. A lot of agents forget about setting that money aside. Put it in an interest-bearing account. When you get paid, take 25% right away and put it into an account. Now, I pay my taxes monthly, but I also pay taxes quarterly on funds that I earn that weren't taxed. So if you're not dealing with a good accountant, for you new agents, Esther, who else is out there that's new? I forget. John's not that new, but there's other agents here that have just started selling real estate that don't know what taxes are about yet. Don't wait until March of the tax year to start putting money back because you'll be getting a full-time job trying to find money or taking out a loan to pay it. And that's a terrible feeling.
Or trying to sell houses really, really fast.
Try to sell houses. Well, and that takes 45 days to collect a paycheck. It's hard enough doing what we do, other than to put yourself under extra pressure to where you gotta sell. If you gotta sell, you won't sell because you're under too much pressure, and your clients will pick up on that. If you're relaxed, you got money in the bank, you're paying your taxes, it's much easier to develop relationships and sell your product. Technology I mentioned earlier, it could be your internet connection, could be computer, maybe a new cell phone. Set money aside for that inevitability that you're going to need a new phone. The remainder, the 26% remainder, that goes to my wife to help pay home expenses. That's where your mortgage payment, your rent, your food, and those things that you do that are personal, that are outside of your business. Here again, maybe you need a little bit more money and you don't advertise as much. Who knows what that is? Some people will say, well, that 10% up top, paying yourself, should be included in the 26. I don't care how you do it. Make a budget, stick to it. And you may find you may adjust these numbers as time goes on, because maybe you bought a better car or a better computer than what you thought you were going to do. Does anybody do something similar to this that wants to share what they do? Okay.
The only thing really, because I have no experience with taxes, it sounds a little embarrassing, but at my age, but I've never had to do it, so it's all new. But I'm very thankful Erica mentioned 30% aside from what you make, so I feel like in a safe place there. But there's a lot that I don't do yet, so thank you for this. It's very helpful.
Well, it's not just putting the money aside, Esther. It's you're going to have your tax. Have you done your taxes yet this year?
Yes, I have.
Okay, so I would reach out to your accountant and let them know that you're on a commission-based job, and so that you can pay you're going to pay quarterly, April, July, October, and January. So you want to get ahead of paying your taxes, because if you don't pay enough in, the IRS will possibly fine you or charge you interest or penalties because you didn't pay a high enough percentage in. So touch base with your accountant to see what that is that you should be paying in. And a lot of times they'll complete the form for you, give you the mailing address. My accountant gives me the envelope and everything. It's already stamped. All I gotta do is put a stamp in it and put the check in there. Pay it ahead of time. Don't pay the penalties and fees. That's just wasted money.
Yeah.
So where's your money go? This is the ugly part about being self-employed. So if you have an LLC or an S Corp, this wouldn't apply to you, but it does in some ways. If you're a sole proprietor, you own your real estate business and you're not incorporated in any way, you pay a thing called self-employment tax, and that's 15.3%. If you have an LLC or an S corporation, you still pay it, but it's not called self-employment tax. It's called FICA, Social Security, and Medicare. So what that is 7.65% is what you pay, but as an individual that's self-employed, you have to double it. So does a corporation, but it's just paid a little bit differently. Federal tax, I assume this one, taxable income of $40,000. So if we go back to our original example where you made $60,000 for the year, 40,000 of that is going to be taxable because of your write-offs, which is your advertising. All those expenses that you save up, you keep receipts for, that you're going to give to your accountant. About $40,000 after your standard deduction is going to be taxable income. If you can get that number lower because your expense is great, but this example is assuming you have taxable income of $40,000. Depending on whether you're married or not married, how many dependents. This is just on a single person. If you're married, great, you're going to get more deductions.
Chris, is it you take the first line off if you have an LLC?
You just pay it differently.
Okay.
No, you don't take it off. You still pay it, but it's not called self-employment tax in that case. It is. It is. So I'm incorporated. My company's called Spotlight Investments Incorporated. I've had it for 21, 22 years now. And I pay myself every month, regardless of how much money I make. I pay myself the same check every single month. My wife knows that I'm going to get that check so she can pay the bills at home. And every month I file taxes to the government. Well, now I don't. I pay Paychex does my payroll for me now, but for the past 20 years, I always did my payroll for myself and all my employees that I had. And when I wrote that check with federal FICA, which is your Social Security and your Medicare, the FICA and the Medicare is 7.65%. You have to double that. So a business has to pay that extra. So when you had a job, let's say you worked at McDonald's and you earned $100, if $20 of that was Social Security and Medicare, you paid 20, your employer paid 20. Well, now you're self-employed. So now you're McDonald's, you're the owner. So now you're paying the $20 and you're paying the extra $20. See how that works? Yeah, it sucks, right? Exactly. So federal tax, state taxes on your income is 3.07%. That's regardless of how you're filing. The same thing with local tax. Mine's 1.7 in my school district. Some people pay 1%, some pay 1.6. Depends on your municipality. Touch base with your accountant. They'll let you know what you need to set aside. If you happen to pay in more, you'll get some money back at the end of the year. Is there anybody here not paying taxes yet? If not, get with me after the meeting or some other time. We'll talk you through it. I'll talk you off the ledge of what you do, what you should be doing, and just give you some personal counsel.
You have a chat.
I do. Who's chatting with me? It says, Esther says, do you recommend getting an LLC? I want to get investment properties. Don't have them yet though. So yes, I always recommend an LLC or an incorporation, but you need to make over $100,000 in a year's time. That's like the minimum threshold. If you're making less than that, then it's really not worth it. I can talk with you about how to do that, why it makes sense. You're going to still need a good accountant. You're still going to need a good attorney. There's certain things you're going to need. I just talked to my partners, and Terry and Christy weren't incorporated until just recently. So all the money that we pay them for their commissions goes to their corporation first, and then they pay themselves out of that. I highly recommend as real estate agents that you have a separate checking account for your business. All your expenses go through that checking account, and then you write yourself a check to your personal account every month or every week or whenever you need it. I also recommend, as it says on the screen, QuickBooks. It's just one accounting system. I tend to like this one the best. I've been using it since 1995, back when we still had DOS computers. If you remember, some of you guys weren't even alive then. What am I talking to? Our corporation, Titan 4 LLC, uses QuickBooks, and that's how I manage all the brokerages that we have. All the admins are tied into it. Everything we do is through QuickBooks, and my accountant has access to it through the back door. She can see everything that we're doing, and I'm in here every day, all day. Terry can tell you, for the first 2 to 3 hours every day, I do nothing but QuickBooks, managing the accounts. You won't need to do that because you won't have as many, but if you really want to track where your money's going, and you want to get honest with yourself, there's a couple other ones. What's that other one? Is it Mint?
Wave.
Wave is another one. If you want to get honest with yourself of where your money's going, Kyle said he don't want to see it. I don't blame you. It's pretty ugly. It's amazing how much money you spend. Terry, you started doing that recently. Yeah, you want to share your experience with that?
No.
I mean, not dollars and cents, but has it changed your perspective about?
I mean, it should have. It hasn't fully yet, but it's not fun.
Yeah, because you got to log every single transaction.
Yeah, it sucks.
It does suck. But have you seen where you could possibly tighten your belt?
Absolutely.
Yep.
Have I?
No,
Should I?
that's a whole other. That's a whole nother talk where I'll put on my therapist hat and sit down with Terry and talk about her spending. We have, the four of us have a spending plan. We have a budget as big as our corporation is. You know, we have 167 agents that work under us now. So it's real important that we're smart about our money so that you guys have a good place to hang your license. And if we didn't manage our money well, that was one of the things we talked about in the very early days of us forming our partnership, is how are we going to manage. That's back when we had 5 to 20, I think we had 20 agents, just over 20 agents whenever they joined me. It was real important that we structured it right to begin with, because then when the money started coming in and we started bringing on agents, and this is true of you as well, if you're only doing a couple transactions a year, set things up now. Don't wait until you're bringing in lots of money, because it's too late. Your spending habits are bad and you're blowing through the money and you'll wonder where it all went. But get on QuickBooks, some sort of accountability. QuickBooks, Wave, Mint is another one I've heard of. Money, there's one called Money. QuickBooks is inexpensive. And that's why I like it. And there's other things you can do with that. I'm sorry?
Wave is free.
Wave is free. So there you go. Is it just WAVE? Is that a spell? Okay. But you can start to see some trends on where your business is, where your spending goes. And it's easier to go to your accountant instead of taking in a shoebox of receipts. You have a profit and loss statement. You have a balance sheet. You have a checkbook register. Everything's right there. If you do it every day, it's very simple. If you wait to the end of the year, it sucks. Key factors to succeed in business and budgeting. What is the secret of success in business? Success only comes from hard work. So if you look at this wheel, it revolves around an entrepreneur. We're all entrepreneurs, regardless what size you are. You've taken on the challenge of being self-employed. And whether you're running your business at the level that we are, or you're running it with only 5 sales a year, your business revolves around passion. You got to have passion for what you're doing. You got to have the will to want to go to work. The perseverance. I've heard some stories from agents. Terry hears them too. Phone calls of where people are struggling and they just keep trying and trying, make it that one more phone call, knock on one more door, send one more email. That's the perseverance to be successful. That's what it takes to be an entrepreneur. Resilience, proactiveness. Sales is you got to put all the work in before you see any results from it. And then the right attitude. If you don't have the right attitude to be self-employed, you're going to fail. So what it says is successful entrepreneurs always give 100% of their efforts to everything they do. If you know you're giving your best effort, you'll never have any reason for regrets. Focus on things you can control. Stay focused on your efforts and let the results be what they be. We talk about that. I know Terry's talked about it in her coaching sessions, is that the activities that you put in day to day, if you put those in without fail and they're good activities, the results will always be there. If you don't put in the activities, you can't expect any results. You might get lucky. Well, they say every squirrel has a lucky finds a nut.
That's exactly what it sounds like.
That's exactly what it sounds like, yeah. But to be a successful entrepreneur, you must possess these 5 qualities, in my opinion. Any questions about that? What questions do you have about budgeting? Does anybody have any comments, questions, suggestions? This is an interactive class.
Can someone just do it for me?
Yes, I can, for a fee. Trivia time. Who's going to win? Who's out? Esther and April's out. So let me get my phone turned on before I tell you the answer. All right. Question. A lead-based paint disclosure is required for all properties older than what year? Here they come.
Everybody had better have this right.
I didn't want to make it too hard.
It's too easy.
If anybody gets it wrong, you got to go sit with Terry for half an hour. That's the penalty. All right. Is that it? Okay, Esther, you were first, but you're not eligible anymore. Sage Johnson, 1978. Sage is correct. Carolyn's correct. Ingrid, April, John Cummings, John Wilson, Danny, Kyle, you suck, 2004. He knew better. He just likes me saying his name. Yeah,
Sit with me for a half an hour.
yeah, exactly. He wanted to, Kyle wants to sit with Terry for half an hour. So we have Sage, Esther, and April are the winners at this training session. I'll get you a gift card. Pick your favorite. It's either, I don't care, Dunkin' Donuts, Starbucks, something like that. We'll get you some gift cards on the company dime. What is next? So budgeting, this is what the whole class is about. Everybody knows this is pretty basic 101. Be smart about your money and your money will grow. Put money back for yourself. If you learn anything from this class, is I didn't save anything. I didn't save anything. I got lucky because I sold my business. And luck isn't a way to run your business. It's not the way to be successful in life. Put back something, save it, put it in an interest-bearing account. Don't put it in the bank savings, that sucks. Get with a financial advisor, Raymond James or Edward Jones, whoever, and invest your money in something smart. Depending on your age, you may be more aggressive or less aggressive. Talk with your professional. I go to Raymond James. They've been really good with me. My money's doubled since 2000 when I sold my business. 2017, I sold my last business. My money's doubled since then. If you invest it, your money will usually double about every 7 to 8 years, depending on what type of plan you're in. Mine's a little more aggressive because I'm older. So if it doubles, if you put back $1,000, it'll be worth $2,000 in 7 or 8 years. Something else I want to mention to you, I've talked about this before. We're all in real estate. Who here owns real estate? Say aye. Besides your house, any investment properties? Anybody? Kyle does?
I have,
How many properties? Who else does?
I have
Esther?
a house in the Netherlands, not here in the US though.
Okay, and that's an investment property?
It's my own, but I Airbnb it. So yeah, there's income. Good
for you. Kyle has properties. So this is my personal plan I came up with because I'm older. I'm going to retire someday. Probably won't be for quite a few years because that's just, I don't want to retire. If you're in real estate, you don't have to retire. You can just keep going to your continuing edge, renewing you're doing your CE, renewing your MLS, all that stuff. So I plan on staying in real estate for a long, long time. At some point, I want to stop actively selling like we're doing now. But my goal to success is I want to buy one rental property a year. And then for 15 years. At 15 years, I'll be 73. I expect to live, my dad's older than that. I expect to live longer than that. But then I want to turn around and sell the oldest property every year, one per year for 15 years. So that takes me from 73 up through 80, 88. Thank you, Kyle. Up through 88 years old. And you can do this. I talked to my son about this over the weekend. He was home. Is why not start that now? What if you bought one property, whatever age you're at, one property a year, every 2 years? Let's say it's every 2 years. It's going to cost you probably $25,000 to $30,000 because it's an investment property. You buy it, and it's hopefully in good condition, and you don't have to spend $300,000. You can buy townhouses for $100,000 to $125,000. They're still available. They're still out there. Buy it, hold it, and sell it in 15 years. If you sold it for exactly what you paid for it,
Then you messed up.
no. Well, let's say that was the worst case scenario. let's say you bought it for 125. My first property I bought for 113. I financed 80% of it. It's now down to $68,000 because I pay extra money on it. In 15 years, it'll be paid off. It's actually gonna be paid off in 11 years because I'm paying it off aggressively. Whatever money I collect in rent, I pay off the principal. Because the last 4 years that I own it, it will be debt-free other than repairs and taxes. And then I'm gonna sell it. And if I sell it for what I bought it for, $113,000, now I got $113,000 in income and I've never touched the money that I set aside in savings or Social Security. That's all extra. And if I sell one property every year for 15 years, it takes me up through age 88. I still have a shit ton of money that I've never touched. Not that I want to turn it all over to my kids, but if I want to travel, if I want to buy something, I don't have to worry about it. So I can go on in detail on how this works for you now. I'm going to do it now, but I'll talk to you more in person if you want to talk about how to become wealthy. That's why we're here. So my goal is to buy one per year. I collect $11.45 in rent every month, and my mortgage payment with escrows is only $700. So after I pay my property manager, I have $400 left over every month, and I put it on my principal 100%. My house will be paid off in 11 years at that rate instead of 30. So for those next 4 years, that money is coming in, I'm putting back to buy my next property. I'm not spending it. I don't put any of that money in my pocket. You could put it in savings. You could put it into buying another property. You're probably going to do some repairs. So when I go to sell it, if I have to put carpet in it or put another heating system, I have that money set aside. But imagine, I'm going to take somebody younger. Who's young here? Carolyn. Carolyn's probably the youngest one here. I'm going to say, Carolyn, we're gonna play around and say you're 30 years old. Okay, I don't know how old you are. It doesn't matter. Let's say you're 30 years old. What'd you say?
I'm ageless.
Okay. Yes, you are. That's right, sweetheart. You are ageless. All of you are. Let's say you're 30 years old. You buy your first property now. You're not going to sell that until you're 45. But then you're going to sell a property every year or 2 years. That's going to take you up pretty close to 60 years old. How much money can you make off other people's money? That's the key to a lot. Everybody ever hear that? Other people's money? It's in some of the books that I've read. It's the best kind of money to make is other people's money. So our tenants are paying our mortgage and they're saving money for us. So you're in real estate. What better place to be than to buy and sell real estate? If you're not buying and selling real estate as a real estate agent, we need to sit down and talk about why you're in this business and how you can become independently wealthy through real estate. Saving money in a savings account or in the stock market is okay, but you're only getting 7% return on your money, maybe 8%. And here of late, it hasn't been as great. Real estate, you can make 100% on your money because somebody else paid it for you. Make sense? I have a client, tell you a quick story, a client that I've been working with for four endless years trying to find him a house, him and her. And they keep saying that they don't want to get burnt by the market. You know, I don't want to overpay for this house. And they're renters. And somebody said this, I don't know if it was somebody in Ivy League or what, but they said, well, rent's 100% interest. And I said that to him over the weekend because it came in, he said something about, well, I don't want to overpay for this house. I said, well, you're paying 100% interest on your rental. So how much longer are you going to do that? If you'd have bought a house 4 years ago when I told you you should have got that house, how much equity would you have now? It's you got burnt by the market.
17, 18% usually.
Yeah, and even if you got a house at 5% back then, you'd still be further ahead. So the same thing's true with investment properties, don't wait until you think you have enough money. Do it now. Figure it out. Talk to your financial advisor, talk to Mina at Flagship or whoever your lender of choice is. What do I got to do to buy a house? If that's your goal to success, maybe putting that 10% back for yourself is to buy a house. Because if you can buy a house and use other people's money to pay it off, that's better than putting it in the market, in my opinion. I'd rather see you do that. If you can do both, great. So what questions, and take this off the screen here, stop sharing. I can see everybody's faces. Oh, look, they're still black. And what I can see is Esther. So what questions do you have about budgeting or financial savings? Could be LLCs or incorporations. What questions do you have?
I have one.
Ingrid has one. Go, Ingrid.
With the entrepreneur mindset, there're gonna be downtime, so, you know, you have to have that passion, perseverance, resilience, everything that you said. When you lose that, or you like something happens, or maybe a deal didn't go through, or whatever, how do you get back on that wheel to stay doing all those things to maintain that entrepreneur?
Did you lose anything by that deal not settling? What did you lose?
You lost the deal.
You lost the deal.
You didn't have the deal to
You-
start with.
It wasn't, you never had it to begin with.
Okay,
So you lost time,
okay.
effort. You still have the client, hopefully, right? Usually. Did you lose it? You're a victim of circumstance, right? So pick this back up here. So it's mindset in that you didn't lose anything. If you could lose your mind. But you didn't lose anything because you never had it to begin with. So how do you overcome that? How do you do it?
I mean, you have to get back, continue with your passion and perseverance, but sometimes it's not always easy.
Right. Did you see the one slide that I had up here is that sales and the things we do are activities. So you put in the activities day in and day out, check yourself, make sure they're good activities without the expectation of results. If you want to make the sale and the money that you make from it is a way of keeping track of how well you're doing the activities. So if you're putting in the activities every day and they're good activities, and if you're not sure, touch base with one of four of us, four of the partners. What are you saying? What are you doing? What activities are you putting in? It could be the quantity of activities, could be the quality of the activities. But if you're putting in the proper activities every day, you got to have that blind faith that it's gonna happen. So a district manager, when I sold insurance door to door, quite possibly the worst job ever is knocking on somebody's door, trying to get in their house to sell them something and getting out with some money. Shitty job. If you think what you do is tough now, try doing that, knocking on doors, like selling vacuums. Pam Snyder and Freeman used to sell vacuum cleaners door to door. Shitty job. It's hard because you're trying to sell something to somebody that didn't know you were coming, something they probably don't need, and they were really good at it. I sucked at selling insurance because I hated knocking on the door because I was afraid of one thing. What do you think I was afraid of? The word no. It's scary, isn't it? It's a big word. It's a big, scary word. But the thing is, with every no, you're that much closer to a yes. So that's where the perseverance and the resilience comes in, is that the blind faith that the activities that I put in every day are getting me that much closer to a yes. Because without the no, if you don't put in those activities and get those no's, you'll never get to that yes.
There's a great book, for those of you who love to read books like this. It's by Ed Milet. It's called The Power of One More. He talks about when you feel like you're done and you can't do any more, do that one more. It's that one more call, that one more door knock, that one more note card, that, that one more touch, simple things. I mean, right down to your life, that one more I love you to your children, just that one more. And it will result in the yeses that and the outcomes that you eventually want.
Where I also hear that one more thing is when people are doing bench pressing. One more, you can do it, one more. Yeah, it's always one more. So. Right.
He's amazing. He's a great guy to follow.
So, and I've talked about this before in my other class that I did, is that my wife taught me, I carry a 3x5, used to carry a 3x5 card. And she said, your goal isn't to sell, your goal is to make 10 presentations every day without fail, 10 full presentations. That means knocking on the door, getting in, giving the presentation, 3 rebuttals. And if they don't buy, okay, move on to the next one. And you mark your card that you made a presentation. And if I didn't do 10 presentations, I owed the system. And the system is the law of averages. If you don't put in the activities are not going to reward you. So what does it take for you to sell a house? If you have a client that's a buyer, how many houses do I got to show them on average before they buy a house, or before I write an offer? How many phone calls or contacts do I have to reach out to before I get a client? And that's the law of averages. And you got to get through all those no's. Tony Reinhardt, who, a lot of people know Tony, that she's relentless on the phone. She makes phone calls. I forget her number. It's a crazy number. Every day, she's got to talk to so many people because that's her mindset, that if I don't talk to them, I didn't go to work today. So are you going to work? Did you put in the activities? And Terry, Justin, Christy, and myself go to work every day. And we've been putting in the activities. I don't think she'll mind me sharing this. I'm gonna say it anyway. We put in the activities every day. We go to work since August 19th of 2020. And we have not collected $1 yet from our brokerages. That's resilience. It's faith that what we're doing is going to work. And we got 167 agents. Every dollar we make goes back into our business. Whenever the opportunity popped up to buy York and Hanover, we were in a position because we're paying down our debt. We're putting in the activities, the hard work that was recognized by the corporate owners that said, there are people. And if you want to be successful in this business, go to work every day without the expectation of making a dime. If you have the blind faith that you're going to be successful, you'll be successful. So let that sink in a little bit. Whenever you guys call us at 9 o'clock on a Saturday night, we're still working. And we,
Don't call us 9 o'clock. on Saturday night.
Call Terry. Call Terry. Okay. Wait a minute. I'm gonna take that back. Don't call Terry. She sat through my training. It's Christy's turn for the next 3 weeks. Everybody call Christy and she's got like, what the hell is going on? But we have blind faith. We believe in what we're doing so much that we go to work every day. We're in the offices when it's still dark out, first thing in the morning. My goal is to beat her to the office every day.
And he will for the next month or two.
Because she's not going to come in.
No, because I have to take my kids to summertime comes around. It's game on, buddy.
Yep. But it's that blind faith that you're going to be successful. And we know we're already successful because of the people that we surrounded ourselves with, because of the feedback that we get from the agents. We've created a good home for people to hang their licenses. And right now, it's difficult to not have the money coming in because, if you ask our spouses, they're like, what the hell? But I warned them early on, this is the way it was going to be. But we take great satisfaction. I think our payment right now is seeing you guys being successful. We take great pride in that. So go to work, knock on the doors, make the phone calls, and that's where we know that we're gonna be successful because the people that are working for us are putting in the activities to be successful. So, good question.
Great question.
I thought it was a pretty good answer too, but she won't tell me. What else? What else you got out there? What questions do you have? We're gonna wrap things up then. It is hot in here. Anything else? All right, well, I appreciate everybody coming. April, Esther, and Sage. You have to reach out to me and let me know what kind of gift card you're gonna get. And
Everybody likes Starbucks.
everybody likes Starbucks. Esther, you want Starbucks? Sage, April, what do you want?
I'll take a Starbucks.
Oh, yeah, I
Same.
knew that.
Thank
Okay.
you.
All right.
Thank you so
Thank you.
much, Chris.
Yeah,
All right.
thank you.
This
All
was
right,
very
thanks.
helpful. Very helpful.
Anybody has any questions on business management or growing your business, anything like that, talk to me. All right. See everybody later.
See ya.
Thank you. Have a good one.
Bye.